All right, guys, we got Cointelegraph here posting this. Take a look at the total crypto market cap. It is now completely round-tripped the 2024 to 2025 pump. Unfortunately, this is what we're seeing on the crypto charts today. $2.31 trillion, a far cry from where we were just back in October. And, it did dip down back earlier this year. But really, if you take a look at where the entire crypto market was, even before that here, I got the chart up here so we can add some indicators on it. You can see we are now currently retracing back to in and around here. Right at the beginning, November 5th, 2024. Boy, it feels like yesterday when we started to see the crypto market really kind of explode after the presidential election. And now, guys, we've round tripped coming back here. So total market cap at 2.31 trillion. Who was saying that crypto market, this bull run, we were going to see a $10 trillion crypto macro cycle? Was it Raoul Pal? Anyway, we got Lark Davis here saying, hodling through a 50% drawdown, watching Bitcoin go from 126,000 to 60,000 is genuinely one of the hardest things in crypto. It feels like a mistake. But guys, if you've been here long enough, you know, here's what the history actually tells us. Every person who held Bitcoin for 4+ years has never lost money, not once, not in any cycle, not after the 80% crash in 2018, not after the beer flu dump, not after the FTX collapse. We cannot predict the future, but data doesn't lie. The biggest mistake wasn't buying on the way up. It was selling on the way down. So let's bring up the Bitcoin chart, guys. Bitcoin chart very similar to the total market cap in terms of the pattern. I mean, Bitcoin still makes up a huge portion of the crypto market, and we're teetering in and around here, guys, just under $68,000 for one BTC, sitting at about 67.9. But you know, he's right. When you take a look at the entire crypto market and you take a look at Bitcoin, if you've held for 4+ years, you've always been in profit, right? It just takes about 1,100 days. That was from 2017 to about 2020. And after that, even if you bought at all-time high back then, the market still did go higher. And even over here, you can see it took about 856 days to get back to even if you purchased at the all-time high in 2021. So what's this market going to bring? Like I said, I have not seen extreme fear be this extremely fearful for this long. Average crypto RSI is down by a little bit. We got the market cap, like I said, at 2.33 trillion currently, and we haven't really seen too much in terms of the crypto space. We've also got Nick Crypto Crusader saying, it's funny when you talk to somebody outside of crypto about how the entire financial system is moving towards digital. They say things like, I'm just going to continue to use cash. And they say confidently, they will never replace my money with digital currencies. These are the same people that use banking apps, have digital balances telling them how much they have in their bank. But more importantly, they are the same people who will end up using crypto without even realizing it. Cash won't be replaced overnight, but it is being replaced. And guys, I mean, the financial system, this is the other part of the cryptocurrency transformation that I feel like, not a lot of people are realizing at the moment. Institutional investors are realizing. Institutions, they know to buy up cryptocurrencies that are going to have value in the future. The question is at what price? Well, we saw even after this big dip for XRP, a lot of people were accumulating, I think retail and institutions alike. Even the US Federal Reserve, they've basically set up not just an argument for why cryptocurrencies are going to be the solution for the financial system, but here, if you listen to this clip, it sounds like they're talking about Ripple and XRP. Listen to this.
But even if you go the cross-border route, so when I push people on how is this useful, they very quickly have to admit it's not useful in America. It's useful to send money to another market or for customers in another country. And then I push them on that, okay? So my wife was born in the Philippines. She's a US citizen, but her family's in the Philippines. So if I want to send my father-in-law money to buy groceries, they say, oh my gosh, it's so costly to do it today. With this gee-whiz crypto stuff, you could do it instantly. But then I still say, how does he buy groceries with it?
Right.
So he gets something in his account in Manila. How does he buy groceries with it? Well, you still got to convert it to the local currency. That's still expensive. Well, no, then they say, no. Well, if the grocer also uses it, then he can buy. So what they're really saying is if everybody in the world uses the same currency or the same payment platform, all these frictions go away. But all these other countries are not going to abandon their own monetary policy. So, when it comes to anything about crypto or stable coins, ask the most basic questions and don't settle for word salad nonsense answers. make them really explain how this thing actually works. And whenever I do that, there's just nothing there.
Enter Ripple and XRP, because it sounds as though, these sound like government talking points from back in 2017. Enter Ripple and XRP, and you can essentially solve these exact problems with this exact technology. I don't know if he did this on purpose. It almost seems like too much of a coincidence. Over the past 10 days, though, around 200 million XRP have left Binance. This courtesy of Michael Branch. Guys, the tokens are exiting after a 40% correction. So what does this mean? XRP is flashing an interesting signal. Over the past 10 days, around 200 million XRP have left Binance. At the same time, the exchange supply ratio has fallen from about 0.027 to 0.025, according to market data. In simple terms, a small share of the total XRP supply is now sitting on Binance. That usually means one thing: fewer tokens are immediately available to sell. So this essentially assumes that people are purchasing up, retail investors probably purchasing up the cryptocurrency, the XRP in particular, on the Binance exchange, and they're taking it off the exchange and holding it, whether it's in cold storage, whether they're staking it. They're not keeping it on the exchange. So at the same time, we're seeing this black line also pull back from recent lows. So essentially the blue line is the exchange ratio, but also, guys, if you take a look at the black line, this is the price action. So taking it off Binance, there is less XRP on Binance now to sell. The broader crypto market has struggled to regain momentum. Social data shows that bullish comments around Bitcoin and Ethereum have also dropped too. So, guys, I think this is a signal that we're going to actually see, whether it's lower lows. We could see lower lows, or we could see a continued consolidation pattern for XRP. I have my particular view. Stay subscribed to lock in. I'm holding a live Q&A later today. Notice something interesting. Whales now hold the largest amount of XRP in supply share history with over 3.17 billion XRP. This is a staggering 17.04% of the circulating supply. Whales are accumulating, guys. It's in the metrics. The development comes on the back of a recent accumulation campaign carried out by this exclusive tier of addresses. The purchasing spree has seen them amass 3.17 billion XRP, currently valued at about $4.5 billion. So some of the key points here: XRP whales holding between 10 million and 100 million tokens now hold over 17% of the circulating XRP supply. Now, this is the supply that's in circulation. This is not the entire supply, but of the XRP that's available, these whales now hold over 17%. This feat comes on the back of recent accumulation trends. And yes, I do think whales are continuing to accumulate, and I don't think this accumulation is going to end soon. Well, this tier has accumulated another set of whales holding between 100,000 and 10 million tokens, has distributed about 3 billion XRP since about October 2025. So the whales are, these are big players, guys. Remember, 10 to 100 million, and even if you hold 1 million XRP, you have to have a lot of dough in order to accumulate 1 million XRP at these prices. So think about that for a second. Think about who's purchasing. We also recently got this from Bank XRP, the new financial plumbing with Ripple Treasury product, G Treasury subsidiary. They've just mentioned Ripple in their latest document. I've got it here from Amplify ETFs. Okay, this is the digital assets tokenization takes center stage as institutional infrastructure matures. And they essentially talk about, the crypto industry, DLT technology with regards to financial products. And down here from Bank XRP, they even mentioned G Treasury and their CEO. Okay, he emphasized that blockchain features remain optional. Clients are not forced to adopt crypto technology, but I have a feeling many of them will. So this positions Ripple as end-to-end institutional financial infrastructure. They have a whole paragraph on that. With Ripple Treasury, Ripple's product stack now spans payments, RippleNet, custody, Ripple National Trust Bank, conditionally approved. I have a feeling they're pretty confident that this will get approved. Stablecoin issuance, the RLUSD prime brokerage, hidden road, and corporate treasury management. Down here, they also mention the platform's access to BlackRock's BUIDL, and Ripple is making the case that the future of corporate finance will run on blockchain rails, with or without clients explicitly engaging with crypto. The future is here, guys, and they're already noticing it. The big bankers, the ones who are launching these products, these ETFs, they understand the financial system and they understand which cryptocurrencies are going to be valuable moving forward. On top of which, we got this from the European Central Bank. I believe it was Ian Binns who sent me this originally. The Eurosystem's exploratory work on new technologies for wholesale central bank money settlement. Guys, Ripple and XRP are named quite a bit in this particular document here. And if I just do a quick search for XRP, there's a whole section here on DLT technology. The Axology DLT trading and settlement system is a private permissioned infrastructure built using the open source code of the XRP ledger. So they talk about the benefits of the technology, along with several other points that they reiterate in this particular paragraph. And again, I just want to mention this is directly from the European Central Bank, guys. So we know what technology these guys are going to be using. Even Ashish Birla came out yesterday saying late last week, the XRP ledger overtook Solana in real-world asset tokenization value. The leaderboard change signals that institutional blockchain adoption is accelerating on the XRP ledger. And if you can see, if you zoom in here, and you can see here that we are seeing XRPL metrics really kind of ramp up as we're moving through the first quarter of 2026. Here's why it matters, guys. RWAs are where crypto meets traditional finance, tokenized funds, credit treasuries, and stable value instruments. When RWA activity grows on chain, it means institutions are building there. XRPL is seeing meaningful traction from institutions that value guardrails mirroring existing market infrastructure. What about the RLUSD? Well, the RLUSD's growth is another major signal. It scaled from 0 to 1 billion plus issuance within months last year, and distribution keeps expanding, including full integration on Binance last week. Liquidity is deepening. And here's just an attached announcement with regards to that. Decentralized exchange growth too on the XRP ledger. Okay, this also shows increasing on-chain participation. DEX activity hit a 13-month high in terms of transactions per day to kick off 2026. More trading volume means more liquidity, tighter spreads, and more capital efficiency. And then you add on to that the XLS66. That adds important new capabilities and is undergoing validation as we speak. Every new primitive expands what can be built. More advanced financial structures, better liquidity coordination, and more institutional grade tooling. So we are seeing, we're actively seeing it in front of our eyes, guys. This is growing. This is what real world adoption looks like. I mean, slowly but surely. I know we all wished for a flip of the switch. Unfortunately, it doesn't look like that's how we're going to get to these exorbitant prices. Maybe not yet. I mean, there could be a point in time where we start to scale and then, that phase kind of ends, and then institutions really do want to ramp up faster because they do, then they can finally trust the new technology. I don't know. It's a thought that I'm throwing out there. Subjective views commenting tokenization is going mainstream in 2026. So another reason why we should be paying attention big time to tokenization. Exchanges like the NYSE are building 24/7 on-chain trading and instant settlement. He also mentions DTCC, which I will talk about a little more later. DTCC is rolling out tokenized treasuries on Canton Network. Banks are approving tokenized deposits. And guys, these are big banks like BNY, Citi, Lloyds, and SocGen, as we heard just this past week. JP Morgan has launched its Ethereum-based tokenized money market. Ant International, which is a Ripple partner, is showing tokenization cross-border payments using global standards. And here is a chart just demonstrating all that. Of course, I will link this in the description of the video if you guys are interested. You remember this video from last year? Okay, we talked about SocGen and DTCC. They are both on this list here. And here's what Tom Sullivan had to say last year about that. This clip courtesy of Digital Perspectives. Listen to this.
Tom Sullivan, Head of Business Development for Digital Assets at SocGen in New York. I'm excited to talk about our stablecoin that was issued by SG Forge in 2023, EuroCV, also known as Coinvertible. The Coinvertible stablecoin was issued with the main purpose of driving capital markets activities on chain. It was issued on the Ethereum blockchain in 2023, and in 2024 it became MiCA compliant. Along the way, SG Forge has established a number of milestones, including becoming one of the first banks to become a virtual asset service provider in Europe and to be able to support the MiCA rules. When MiCA went live in 2024, it was fully MiCA compliant, and it also became fully transferable on the Ethereum blockchain. Since then, it will now be available on several other blockchains, including Solana, Ripple, and Stellar. And we're looking forward to being able to use it as a means of cash and as a means of collateral using in this project.
All right, Tom, I see that the collateral movement that you just processed has already settled and our exposure is covered. That's amazing. You entered a movement on your side, and since we're using the same distributed ledger, I saw it update instantly within a matter of seconds, and my exposure is completely covered.
Joe, thanks so much. I mean, this has been so easy to do, and it's one of those things that when you think about all the time and effort we've spent in the past trying to find the right assets and to be able to deploy them and move them around and make sure that we have our assets reconciled, and to be able to do this so easily.
So you can see it back in there. I'm just going to point it out again here. DTCC tokenizing a ton of real world assets. So then fast forward to just earlier this month, the DTCC plans to tokenize all of its $100 trillion assets under management. That is the final goal here. This is Nadine Chakar, Managing Director and Global Head of Digital Assets at DTCC, and this is what she had to say earlier this month.
Our aspiration overall is someday to tokenize all $100 trillion of DTCC assets. For right now, we're starting with a smaller subset of that, as you can imagine, especially where we're sitting, right? If there's a mishap at DTCC, all these guys here suffer from that. So we've got to be very careful and cautious on how we proceed.
What you just said there also just goes to my point of, eventually we will see $100 trillion tokenized. I think they're really looking to be cautious at the moment. We will see this scale slowly, I think, at first throughout 2026. But guys, once I think they do see how valuable DLT technology is to tokenize real world assets, I think it'll start like this and then eventually just kind of ramp up very quickly. Of course, this is the XRP chart, not real world tokenization utility. But guys, I have a feeling XRP price will move commensurate with real-world tokenization on the XRP ledger. The more demand there is for XRP, the higher the price is going to be, especially if we have whales gobbling up a huge portion of the circulating supply. That's just my opinion. And for more opinion, you got to subscribe and stay subscribed to lock in.